Hey everybody, this is Simon, your crypto CPA from the Lone Star State here at Active CPA. Well, today what I'm going to do is I know that I've been getting so many emails, so many questions regarding the 1099 DAs, small questions, big questions, questions in different categories, whether they're pertaining to short-term sales, long-term sales, cost basis not provided to the IRS, cost basis undetermined. In some areas where you have already provided a cost basis to Coinbase or other institutions, now they have a separate category. So it's almost like everyone is so confused. Everyone wants to know how to tackle all this. And what I'm going to do in this series is I'm going to show you a CPA's way of tackling this. A professional's way of tackling this. I'm going to give you a little bit of context as to what is important, what is your obligation, what needs to happen. And then based on all that, you're going to go ahead and make the adjustments. I'm also going to share with you different adjustment codes for the 1099 DA. And as they are applicable to you after you have done your crypto accounting, then you can easily enter these codes in, whether you're using TurboTax or any kind of tax software. But if you are a CPA or a tax preparer that is also watching this video, I'm going to make this video also palatable for you, just so that you also know in whichever software you're using to do in doing these reconciliations or providing an adjustment for your client, what you need to do. So this is a video that is made for professionals and also for regular taxpayers who are also professional in their own way because they've been doing their own taxes for decades. So let's get right to it and let's go. So first of all, also a disclaimer. I obtained a little bit of help from the AI in putting this slide together. Again, I'm not gonna fear monger anyone. I don't want to scare people about. I want you to tackle these things head on. Usually my slides are not black and red. So they're meant to de-stress. I'm all about de-stressing, taking your stress away, because we don't need an additional layer of stress in trying to sell our services. Not at all. Cryptocurrency is already so complicated. So we don't need any kind of fear mongering from our side or any other practitioners or anyone combined. So let's get right to it. So first of all, crypto taxes, you cannot make errors anymore. And I know earlier we were using the blanket of, well, we didn't have the rules codified. Sure, there are other rules that are still in the gray area, but you must report all the data that you have accurately and in full, and it has to be proper. Otherwise, you're looking at massive amounts of penalties. So let's get right to it. So just looking at this, I mean, we have had like so many individuals that have filed erroneous tax returns too. And it's just luck that the IRS has not come back to them. But usually you're talking about a 20% accuracy penalty on the amounts that are owed. Plus there could be a 75% fraud penalty. And typically anytime you're doing a adjustment or adding in any kind of interest, there is that quarterly rate interest that is also adjusted every year and every quarter. So again, these things can rack up. And especially if there's something that is in the past, this can just massively add up. And you have to understand, now IRS is dealing with analytical tools. What are analytical tools? What they're doing is they're matching the data that you're sending in the background. And for example, in all those new 1099 DAs, right? What they know is the proceeds that the exchanges and the brokers are reporting. At a minimum, your proceeds that you're putting on your tax return, it should be equal to or more than those proceeds. So imagine you have crypto that you're reporting yourself. It's not reported on these new broker forms. Let's say that you have capital gains that are coming in from a 1099B brokerage. So all those combined, they know what the proceeds are. So these are areas where you can't technically mess up. For example, they know that you've sold one stock at TD Ameritrade. They know very well that you've sold a Bitcoin on at Coinbase, but they don't know the DeFi side. So when you're reporting and you're adding additional lines to your 8949, even if the boxes are checked wrong, for example, the ones that are not provided now, and we'll get to it, they're using these analytical tools to match. So now it's very easy for them to see a return that the proceeds are half or less than half or even lower than what they should be. They know that return should be flagged. So the computer does this now automatically. And then as the return progresses in its stages of sending notices and everything else combined, and then you that triggers an examination or an audit. We call in the IRS's terms, it's called an examination, but typically we're referring to this as an audit. But again, that takes a long time for it to get there. That means you've been ignoring all the notices and letters that you've been getting from the IRS. And then once they see that you are a taxpayer that is willingly neglectful, then don't complain about these percentages of penalties that you're seeing on your screen. Why? Because then you're willfully neglecting all this. This is not something an IRS agent can come and say, you know what, let's cut you a deal because you've been so good from day one. No, this could turn the other way around. So please, please, please fix things that have been done in the past. Get a professional to look at everything. Make sure that you're also appearing as a taxpayer that is honest, that wants to report everything. Otherwise, when it's time for those letters and when it's time to make those deals with the agents, you have to demonstrate a record of a taxpayer that has been playing by the rules. So that is a must. So now let's get to the next section. So these are the 7 critical areas that we have been, again, we have been monitoring questions on Reddit and other forums, and we've been answering so many questions too. And again, we get questions on our videos on YouTube, on TikTok, on X, and all other platforms that you're seeing me on. And based on those, we have devised a list of the 7 areas that we're going to cover in this video that should allow you to make all the adjustments. And for if you have any open questions, this video should be able to help you with 99% of those open questions. Okay, so let's get right to it. Well, first of all, your 1099 DA is not your tax return. Why? Because people are thinking, well, I got this form and has everything on it, and I don't need to do anything about it, and I'm just gonna plug it in and it's over. Well, that is true if it was a traditional brokerage where you're trading equities, stocks. That is true. They're capturing everything there. They're known as your custodian. You've probably seen the word or heard the word custodial. So basically, what they're doing is you're using their platform to then buy and sell equities, and then they are capturing the cost basis, the proceeds, the gains, and everything in between. So they are technically they are your custodians. And when you get a 1099B, 99% of the time it is accurate. For some of those that have stock options or RSUs, you'll notice sometimes the vesting date and there could be errors there. But again, that is all reconciled on the later pages, and then you can see where the errors are. But 99% of the time, your 1099Bs are that's it. Like that is the main thing that you need to enter into your tax return. But still, a 1099B is not your tax return. Same thing goes for the 1099DA. The 1099DA is giving IRS the details of all the centralized exchanges and brokers that are acting in this custodial somewhat capacity. Not really, but they are. That's where you're using their platform, and they're registered in the U.S. and they're able to monitor and see your crypto being purchased, sold, and all of that in between. So based on that, they are capturing most of your crypto trades. But those that are on the DeFi and that are on their own self custody wallets or self-hosted wallets. For example, you're on Chrome Web Store, you get a MetaMask wallet. All of those wallets, there is no reporting done, and that is the beauty of crypto, right? We wanted to be in crypto to have autonomy, to have privacy. I know a lot of folks are complaining about the privacy aspect right now, but still, we were there to have freedom. So DeFi is an area for you to have freedom, but if you are a US taxpayer and a US resident, you know very well that you have to report everything honorary, right? That means all those liquidity pools, all those staking rewards in a different area where the IRS can't see, all those users that are on Mexi, Bybit, and all the other platforms that you're using a VPN to connect to, you still need to report those crypto trades. It doesn't matter if the exchange or broker is not denominated in the US. So that is the area that you still need to report. So the 1099 DA will never ever completely accurately provide a true picture unless you've only exclusively used that particular broker or exchange only from the time of inception of your crypto journey to now. That is the only time where we can confidently say, well, they've captured everything. Otherwise, if you have just ventured out into DeFi and obtained a wallet and transferred one single crypto, it doesn't matter what quantity, to that external wallet, now you're venturing into DeFi. So there's no way a 1099 DA can capture all of your crypto trades. So remember, the 1099 DA also is not your tax return. Your tax return is your 1040, your 1120, 1120S, and 1065. And in those tax returns, you're entering the form 1099 DA. And the 1099 DA then is reflected on the form 8949 within that return. And then 8949 is then summarized within that return. So that is the hierarchy. That is how things flow from this particular form, the 1099 DA, to 8949, then to Schedule D. That's how it's all going in, and then it's going into your summarized. So people mess up, obviously, that. And again, this 1099 DAs were established when? Because of the IRC 6045, right? The IRS has a copy of every single 1099 DA that is issued. So I have a lot of folks that are asking me, well, I can provide the right cost basis to Coinbase, to Gemini, to Kraken, to Uphold, and then they can issue a new 1099 DA for me, right? Well, the answer is yes, but do they have the time right now to do this? So it's better for you to go ahead and make these adjustments yourself right now, because otherwise, sure, there will be a time of reconciliation where the IRS sees a new 1099 DA form against what you have supplied in your tax return. So they will be able to verify, but again, it could cause a mismatch. And if you are someone that wants to solve this 1099 DA missing cost basis or wrong cost basis issue, then it's better for you to make the adjustment now and in your return, and then supply that copy to your broker. That is the rule. And you can do that yourself. And I'm going to go into detail exactly how you can make that adjustment. All right, so again, I have it listed here that a mismatch between the 1099 DA, what was issued, versus what was supplied in your return, will cause a CP 2000 notice. A CP 2000 notice is when the IRS has assessed a liability of, because they have data. Most of the time right now, you probably will get a letter. Right now, you will not get a CP 2000 notice, because the IRS also is assuming and estimating that this year is going to be a year of turmoil, because everyone is requiring adjustments. And there's so many errors on these 1099 DA forms. And again, even the stable coins. We need to talk about the stable coins in just a little bit. So let's get right to it. Real penalty numbers. Again, we talked about this. I don't want to fear-monger anyone. We're talking about 20% accuracy penalty. Again, it was established a long time ago. 6662, 75% of a civil fraud penalty. Again, these are things where you're willfully evading taxes. You're willfully neglectful. You've shown a pattern of you deceiving the government willfully, right? Reporting erroneous data into your return and hoping that no one catches it. And again, the quarterly interest, it fluctuates depending on the CPI, and that could easily be up and down. So again, do not run into these issues. Report your data, report it accurately. You might think that the taxes are a lot. They're not. If you do this right, if you use the accounting methods right, you can certainly have a tax strategy that can dwindle your tax bill down to a very tiny amount. So you need to certainly use the tax code for crypto. This is one area that the public has to use the tax code. Otherwise, you're 99% you're going to overpay your taxes. All right. So a real scenario here. A 1099 DA shows 200,000 of proceeds, right? Um, your real gain was 20K, but again, if you didn't have the cost basis missing, you would have paid 36,000. And again, you also have penalties and whatnot. So these are things that you have to capture. And for those tax practitioners and CPAs that are watching this video, do not enter a 1099 DA just by itself. Make sure you're viewing every single page. And those that are getting a 1099 DA from Robinhood, basically it's showing up after your 1099B. It's in the same PDF. And I'm seeing CPAs and tax preparers where they have maybe a data entry person they're just giving all the returns to, and they're just coding it in without even looking. So you need to make sure the 1099 DAs are entered into the tax returns properly.